Listen to this. There are 1,000 exchange-traded funds to choose from. So how does an investor form a portfolio based on their investment strategy and goals, you ask? Some ETF experts put together some model portfolios found exclusively on our website at CNBC.com. In the meantime, though, let's go down to Bob Pisani, who drew the short straw this week. He's at InsideUniverse.com's Inside ETFs conference with two special guests. Bob?
Sudden cold snap here, Bill. It's 78 down here.
Well, thanks for joining us, Bob.
Every shot, he says the same thing.
I'm holding on down here, just barely. Let's talk about what's going on.
Bob.
Come down here, Maria, next year. Come down and be with us. Jim Lowell's here. Jim Lowell, of course, is Chief Investment Strategist with Advisor Sentiment. To my far right, Tom Lydon, ETF Trends.com. Bill said it, 1,000 ETFs. How do you know what to do? You come to us because we bring in experts, put together model portfolios. Okay, Tom, let's start with you. Inflation. We wanted a portfolio where investors could profit or at least protect themselves from inflation. You put it together. You helped us put together. How did we do? What did it look like?
Yeah, it was up 13.5% last year. Not bad. And you can be real specific with ETFs. So we had U.S. tips by PIMCO. We also had SPDR International tips.
These are inflation-protected bonds.
That's right. And as inflation goes up, you're also benefiting from and paid for that as well. You've got commodities with PowerShares DBC Broad-Based Commodity Index, a base metal index, and most importantly, ProShares has done a great job with their short treasury, TBF, where it actually profits when the value of treasuries decline.
So by betting with inflation, you produce 13% return.
That's right.
All right, let's move on. We asked for an emerging market portfolio. People have been putting $100 billion in the last 2 or 3 years into emerging markets. There's many of them out there. What did the construction of our portfolio look like, and how did it do?
The portfolio is broadly diversified, so at its core, Vanguard Emerging Market holds the MSCI Emerging Markets Index.
That's the VWO. That's one of the biggest ones out there.
So it certainly automatically is well diversified, but we also have very significant weightings in China, India, Brazil, Chile, a play on copper, Turkey, perhaps the equivalent to sort of the Brazil of the Middle East, and Brazil as well. That was up almost 18% last year.
And how did overall did we do? I know the emerging markets were up 18%. We had a bull portfolio that was up 16%. The bear one was only up 0.8%. And I guess my point is these portfolios performed about as you expect compared to the rest of the global market.
They did what they were supposed to do, and we feel very proud of that.
Yeah. Are you amazed at how much this industry has grown? $1 trillion. I've been doing this 6 or 7 years talking about ETFs. Right. They were nothing. There was one, essentially. The SPDR was the only one anyone cared about at this point. Now we're talking $2 trillion in the next 2 or 3 years. Is there anything out there that's going to stop this? Is there anything that's worrying you about the growth of ETFs?
I don't think so. I think what you're seeing is phenomenal growth of an industry whose time has come. If you had backed up the clock on the mutual fund industry and asked them to create the perfect mutual fund, I think they would have constructed it much more like an ETF today. Trading flexibility, tax efficiency, and the ability to go vertical into some very deep and interesting areas of the market that used to be only available to institutional investors.
You know what amazes me, Tom? 10 years ago, you would have had to have an institution construct a portfolio and spend a lot of money if you wanted to buy the entire S&P 500. Today, it's 9 basis points to buy the SPDR.
Right.
To buy gold, 10 years ago, you would have had to have a futures account. You can buy it in a brokerage account for 25 basis points today. That's a miracle to me.
Just pennies on the dollar. And again, it's all about choice. But as we look forward, there will be many more ETFs. It's going to require more work for investors, too, and more education. That's something that Jim and I and Matt, who've helped construct these portfolios, we're working hard to make sure we do that.
There are currently 800 ETFs in registration. So
800 in registration?
In registration, coming.
So there's a lot more still out there. Right? Yeah. Jim Lowell, Tom Lydon, thanks very much. And if you don't know what to do, again, we're trying to help you out. We've hired independent people to construct model portfolios. Go to tradertalk.cnbc.com. That's my blog. Click on the model portfolios. We have 6 of them with different kinds of ETFs suggested. You can see their performance and you can track them in real time. Bill and Maria, I'm going to go warm up a little.